The broadcast is now starting. All attendees are in listen-only mode.
Hello all. We would like to welcome you on our webinar. The first webinar on the series of news trading webinars, which will be continuous based on the release of the major economic data. We would like first to confirm that everyone is listening the sound clearly. If you can hear me clearly, just press yes, type yes. Everyone can hear me? Okay, good. So let's start. Okay, so we will start with the definition of the FOMC. Today, there is a major news on the economic markets called the FOMC. We will talk what is the FOMC exactly and the definition of the FOMC. But first, we would like to draw your attention to check the economic calendar on our website on daily basis for all the traders. Before you start your trading day, you have to take a look on the economic calendar. What's the major news that will affect on the market movement and direction every day? All you have to do is to go to www.orbex.com, check the research and news, and find the economic calendar. You will find the major economic releases with the volatility of the news, that if it's important or mid-important, and you will find the actual, the expectation of the news, and the previous result, which will guide you on what direction the market will move today. And if you click on the economic release, it will give you the full explanation about the news. What is the news and the board of that issued that news, and the full details that you need about it. Now we will start with the definition of the FOMC. What is the FOMC? The FOMC is the Federal Open Market Committee. It's the policy-making arm of the Federal Reserve. It determines short-term interest rate in the U.S. when it decides the overnight rate that banks pay each other for borrowing reserve. When a bank has a shortfall in required reserve, and it's one of the major numbers that moves the market, and that's why every trader should care about this economic release. This rate is the Fed fund rate. The FOMC also determines whether the Fed should add or subtract liquidity in circle markets separately from the related to change in the Fed fund rate. The Fed announced the policy decision, typically whether to change the Fed fund target rate at the end of each FOMC meeting. The FOMC announced also including brief comment of the FOMC views on the economic and how may moves. Members voted for the how may vote against the policy decisions. This is a small definition about what is the FOMC exactly. For more depth, as we mentioned, you can visit our website and look for that definition on each economic release. All you have to do is to click on the news to get the full definition of it. Now on the last FOMC meeting, as we know, the market moves based on the Fed Chairman woman Janet Yellen and the 6-month deadline. What does that mean? Attention back to atmosphere in the U.S. Federal Department and through the minutes of the meeting last March, when, as we mentioned, the Fed Chairwoman Janet Yellen mentioned that 6-month deadline description must elapse of the end of the work on bond brushes in order to be possible to start moving in the interest rate. Since the FOMC decision, financial markets have had some conflicting Fed speaks to describe, with Yellen laying down her Relativity House press conference and after the labor market release at the end of February, which shows the employment data out of the US, which showed job openings stopped at 4.2 million as of the last days in February, helped ending the moving in equities, although it was evident as the day wore on the purse became little excited. The Fed is due to release today the minute of its 18-19 March meeting, at which is reduced the monthly basis of bond buying by 10 billion to 55 billion. Fed Chair Janet Yellen said at the time that the central bank may start to raise borrowing costs around 6 months after ending its assessed precious program. There are 987.5 million euros at 1.35 billion of the euro-dollar options expiring today at 1.37 strike prices, according to a data from Bloomberg. Treasury's guide at the yen strength against the dollar on April 4th after the U.S. Labor Department data showed payroll rose 190 last month compared with 200,000 increase estimated by the economist in Bloomberg News survey. Since the time, we have heard conflicting views of Fed members. Some of them are very interesting by suggesting that the rate should be moving sooner rather than later. and others wants to push the date forward and toward the end of the next year. Minutes of today meeting carry signals for specific posted for the US dollar direction and will give the traders the answer if it will be in benefit favor the dollar or will harm it. Let's take a look on the US economic condition. We will start with the inflation rate. As we see on the graph, the inflation rate recorded 1.1 last month, dropping from 1.6 on the previous month. And as we see on the graph, it keeps moving on the low direction or down direction. If we move from the inflation letter to the unemployment rate that we just mentioned, we will find that on last day of February, the unemployment recorded 6.7, little bit higher from what it was expected at 6.6. And we have to remember here that the Fed Reserve removed or disconnect the unemployment out numbers from tapering decision. Now they are looking to a different data like wage growth. So if we see the graph in front of us, the unemployment rate are moving also on downtrend. So if we notice that on last July 2013 it was moved on 7.6 and it keeps going down from July as it records 7.4, 7.3, 7.2, then it moves to the 6.7 and what they was expecting to reach 6.5. Let's move to the non-farm payroll. If we see the graph in front of us, it's mostly moving on a range side, as we see from higher record at 274, it went down to 84 on January 14, then it started moving to 144, 197, and at its record on last Friday, 192. GDP growth on the US economy also, it's moving higher. As we see on the graph in front of us, the gross domestic product start moving on uptrend since the beginning of this year from 1.3, 1.6, 2, and on the last release it recorded 2.6. Now, if we gather all the previous data, we can notice that the economic on the US are moving on the right side to continue the tapering by the Federal Reserve, as they announced on the last meeting that they will make the tapering 10 billion, as we mentioned, from 65 to 55. So we do expect that the Fed ring will continue on this movement and try to end it by the end of 2014, as they mentioned before. Let's take a look on the indexes, and we choose the Dow Jones Industrial to. Let's take a look on the Dow chart. This is the 4-hour chart. As we see on the last FOMC meetings, the Dow Jones dropped from levels of 16,505 and it reached the lowest level during the previous 6 months at 16,100 almost. Now during the last three sessions, the indexes and Dow especially lost more of the benefits of the previous month, and it reached the level of 16,240, 16,170, the area which showing as a buying zone on the uptrend channel showing on the screen in front of you. Now there is two expected scenarios. The Fed will announce today. One of them is to continue the tapering program, less accommodative policy, or stop it, the tapering program, more accommodative policy. If they take less accommodative policy, we will see the Dow move on the levels of 1650, and this will be highly expected. Otherwise, if they do the more accommodative policy, we will see a rebound on the Dow prices again to the area of 16,350, and this will be less expected. Let's move to historical volatility on the gold prices. On the graph in front of you on the screen, this is the 4-hour gold chart, and it's the green arrow shows the November meeting and the gold movement during last FOMC meeting. As we see, the prices of the gold start dropping when the FOMC announced the start of tapering. The gold ounce almost dropped at $20 during November. On the next meeting on January, the gold prices also continues to drop. We are facing some technical voice problem. Just give us a second, please.
During the last
Sorry, but some of the audience are reducing from the echo on the sound. So we try to reduce the echo. There is only one mic working. I don't know what's the exactly problem with the echo. Let's go back to our webinar. So on January, as we mentioned, if you see the green arrow, the prices drop when the Fed announced to continue the tapering of the bond precious program, but the drop was less from the last or previous FOMC meeting.
FOMC meeting.
What do we expect for the gold movement now? As we see, the gold prices moving on tight channel and it's on rebound on Fibonacci indicators. It's still moving below the 61.8 Fibonacci retracement level. We do expect the gold will be moving on range between the 1,330 levels and the 1,280, which was recorded on end of March or 1st of April of this year. This will be the most important supporting area at 280. So if anyone on buying side on gold, he has to place his stop around this area, because if this number is breaking, we might see a big drop in gold prices if there will be any closing below the 1,280 levels. Now, during the news, we do expect that the movement of the gold will be on range, as we mentioned, between the 1,330 and the 1,280, which almost $50 range movement. If we move to the Euro USD, as we see, the economic indicators on the Europe was much more better than it is in the US economy weather. That's why we see the euro prices are getting more gain against the US dollar. The movement was, when they start the tapering, almost 196 pip on uptrend movement. So it takes the euro from the 33 levels to the 35 and 36 level. Now, during the news, again on the next tapering from the FOMC, the euro continues on the uptrend movement. There's still some technical error on echo of the voice. Everyone can hear me clearly? Okay, so what do we expect for the euro? If we see the graph in front of us on the screen, we can see that the euro is moving on uptrend channel also, based on 1, 2, 3, 4 strong supports area, and it targeting the area of 1.3850, 1.3920. We do not believe that the market will be able to break out the uptrend channel, which is at around 36.70, and if the euro breaks this level, then the euro will be able to visit the area of 35.80 or little bit less at 34.65. We would like to draw the attention of all our traders who attend this webinar that this webinar will be recorded and it will be available on our website under the Research and News tab if you missed to take the webinar online. And one more important note, we would like to draw the traders' attention that trading in news is based on a high risk trading, or it's one of the most high risk trading strategies. So if you are new in this market, we do not recommend that you trade during the news. You can close your position before the news start or you can place your stop loss and take profit also before the news start. If you want to trade on the news, our advice to you is to trade on the profit. Do not trade on your capital. Do not risk your capital during news trading. Almost we are done with our presentation. If anyone has a question, we will start take the questions in a minute. Any questions? What are we expecting from tonight, FOMC? Okay, we do expect, as we mentioned, that the FOMC will continue the tapering program, and we do expect the voted of the FOMC member that will be on the side of start moving the interest rate by the end of 2015. Regarding the outlook of the Euro GBY, you can use our direct technical analysis support on the website live chat to take any recommendation for exact sample like the Euro Yen. Thanks for your attending. Hope our webinar was useful, and thank you again.